Here's the great thing about options is I can like create anything I want. I can create a scenario where I make more money.
Before we get rolling here, just a reminder to please like and share our videos. Your support helps us to continue to bring you the wonderful content that we share with you each and every week.
I don't make $10,000, but I make more money if the market stalls. I make more money from where I am now. I make more money from where I am now if the market stalls. I make more money from where I am now if the market sits still. Right, but I don't create this much money. Right, I always have a trade-off. I'm trading this off for this. Right, this is like I don't like the risk here, and I don't like the risk here. So I can fix that. Like I probably can't fix it with trade rules. Like I can't make a rule where I'm going to fix because I never know what situation I'm going to be in. Right, I can't make a rule-based trade, non-subjective, that does something every time that's always going to fix it at the right time. I just can't. But with the awareness that I am in expiration day and I have these vulnerabilities and I don't like them, I can do something about that, right? Because options are cool that way. I can do stuff. So what I can do instead is I can create something similar where I can take away those vulnerabilities. Again, I'm not predicting movement. I'm not predicting range. I'm just saying that I don't like the vulnerabilities here, right? And I can look, I can do like I didn't like do a trial run here, but I can do like that, and I can do, and let's say I do, I don't know, 6 and 5, -6. I can do that, right? Oh, my delta's a little high. I don't give a crap, really. This line is changing so fast anyway, it doesn't really matter, right? But I take away the vulnerability of like being here and losing, I mean, this could have gone like really bad and been down, like depending on how I have V shifts, that could have been really bad and been down like $5,000. And then if I get this really huge down move, I'm risking like $7,000 or $8,000. But now I'm only risking $4,000. And I still have the ability, like if this thing stalls in here, I'm still going to make this, I'm still going to do really well, right? But it takes away the vulnerability of move. So this is like a positional adjustment, a subjective positional adjustment to do something like this. And if I don't like this, I can create something maybe even better, right? So like this is just something I threw out off the table. It's like I can do -5, -6, and I can yank out, do a +9 and a +1. I don't have to stay in 10 contracts, right? And I can do this. I still have a chance to make good money. I actually widen my range of profitability a little bit, and now I don't really have any risk to the upside, and I still only have $3,000. I can't even hit max loss in my standard trade, right? So I'm within my risk guidelines, but now I've made the probability of me being profitable much, much more, and my probability of a catastrophic loss non-existent, basically. This is a better position. I have a little bit more vulnerability to a loss with a down move. But, especially if I'm like biased to the upside, I could definitely do something like this. And I could even win with that move. Although I wouldn't be concerned about winning with that move because the probability of having an 80-point move in the Russell the following day is not like super high, right? Or 56 or 60 or whatever the heck it was. It's usually like 20 or 30, right? So I don't know that I would do that, but I can do it if I want to. And I could do even more extreme, right? I could do like an 8 and a 2. Now my downside risk cast event is only about half of my maximum loss. And my upside, if I get a big move, is, I'm more in the break-even range, but I can do that. I could exit the whole trade and go do it over a cycle because I don't like it.